It's 24 minutes away from 8 o'clock here on ABC Illawarra. 800,000 Australians deferred their home loan repayments, have deferred their home loan repayments since March, and some have started repaying. Others of you might be a little unsure of which way to go. Maybe your circumstances are uncertain, but that 6-month window is coming to a close. And so you will soon be contacted by your bank to discuss what you'll do next. To talk about this further and what it all means, I'm joined now by Martin North, our financial analyst from Digital Finance Analytics. Hi, Martin.
Good morning.
We're looking at this 6-month period whereby hundreds of thousands of Australians deferred their home loan repayments. Do we know much about how many have started paying again? I read a figure of 13% somewhere, but I think people have slowly started to start repaying their home loans again.
Yeah, so about 1 in 5 of mortgage holders, and by the way, this covers small business owners as well, and about 1 in 5 there as well, have started to make repayments. So that's the good news. Obviously, the more concerning news is that means that there's a lot of people who have not yet made plans to start repaying or may not be able to repay. And the first phase of this was done, very quickly. There was almost no validation. Pretty much if you phoned up the bank and said, give us a holiday, they said, yeah, sure. Now they're being much more rigorous under the regulatory guidance that they've received. And so there are going to be individual conversations held with a lot of people, and it will be, I think, an uncomfortable conversation for many.
Yes, I think so. Well, the Australian Banking Association has released its latest figures and has kind of unveiled what it's calling phase 2 of support as this 6-month window comes to a close. So I understand it's because ASIC approached the banks a little while ago and said, right, what's your plan to get out of this 6-month period? Is that right?
Yeah, so ASIC and APRA they're the two regulators, have been very active. And APRA basically gave the banks a leave pass until next March so that none of the loans that are deferred need to be reported as bad loans, which of course means that they financially are better off, the banks. Mm-hmm. And ASIC has been guiding the banks with regards to the sorts of conversations that they expect them to have. And essentially it goes like this, have a conversation. If it is likely that people are going to be able to start repaying because, they're now back in work and they're getting income, then the repayment should start now, basically end of September onwards. If you're in a situation where you have a lot of doubt about what's happening, so you might be out of work and you may not have any income or much more limited income, then there's a different conversation, and they have the ability to be able to extend that holiday period for a little bit longer, potentially for some. But there are also another conversations that need to have a bit of a different sort of slant to it, which says, well, but maybe if you are in a different financial situation, your income is unlikely to recover, then you may have to take more drastic steps. And that could indeed, for example, mean putting your property on the market before the whole thing blows up. And interesting that one of the CEOs of one of the major banks a couple of weeks ago said there will be some people whose the best option will be to put their put their property on the market and sell before things go bad.
That said, it's not in the bank's interests to have a whole heap of foreclosures and have a heap of properties on the market as they attempt to recoup their money, is it?
No, the last thing you want is for the banks to foreclose, right? So what I think people are thinking about is an orderly process of dealing with this through these various options. Some people say, and I think they're right, one person who defaults is their problem. 1,000 people who default, that's the bank's problem. But 10,000 people who default, that's the country's problem.
It's everyone's problem then, yeah.
Exactly, because it pulls down the economy, it pulls down the banks, and obviously it hits huge amounts of individuals and confidence, all those things. So we want an orderly process here, and this is what is being charted out. So hopefully there will be many people who will be able to start those repayments now. And by the way, many people who got those holidays actually didn't really need them. They saw this was a bit of an advantage, a bit of a holiday from paying their mortgage. That's quite a relief. They start. But there will be others who will be in a much more difficult situation. Now, the banks can restructure the loan, potentially, and perhaps extend the term. I also noticed that in some cases, the banks have actually started charging a little more when people have restarted their loans, because essentially what's happened is that those principal and interest payments that should have been made don't go away. They get rolled up into the loan, so the loan gets bigger, right? Which means that effectively you have to pay back more later. So this is, really quite complex. What I would say to people is this: you can't ignore this. If you're in a situation where you've got a deferment at the moment, you have to have this conversation with the bank. It's worth doing a little bit of preparation to think through what the various permutations might be for you personally in terms of cash flow and those things, right? So that you go in a bit armed, because otherwise it's a bit of a one-sided conversation.
And the banks will be treating this, it sounds like, on a case-by-case basis, but they will roughly, consider you to be either someone who can continue to repay, who can resume repaying, I should say, someone for whom your outlook is reasonably positive, but you're still struggling at the moment. For example, if you stood down in some industry like, for example, tourism, which we know will pick up again eventually, but maybe a year down the track or whatever. And then there are other people who really the prospect of them recovering financially anytime soon is grim. I mean, is it fair to say that they're kind of the three categories people will fall into?
Yeah. They're the buckets, and it's about 25 people will be fine. They can start repaying and get back to normal. There'll be about 25% at the other end who are going to be in a much more difficult financial situation, and some of those may have to consider, putting their property on the market in an orderly fashion. Sidebar, a lot of those are actually property investors. So the banks are going to be a little bit more aggressive, I think, with property investors, because essentially a property investment is a financial transaction alone, right? And then you've got these people in the middle who probably will have some better news down the track, but not yet. And then that goes directly to, so what's happening with the virus? When are we going to reopen the borders? When are some of these industries that have been under the pump going to recover? That, of course, is a really complicated and difficult question because nobody quite knows. So we are planning against a rather uncertain backcloth. But nevertheless, these will be individual conversations this time, and so you can expect a call from your bank if you've been postponed.
Yeah, and so, as you said, don't avoid that phone call. You really need to do a bit of homework and prepare a little. And we've heard from the Australian Banking Association, they've put on 5,000 new or redeployed staff to work with customers at the various banks to ensure that people can talk to a person to try to get this sorted. But, it will be tough decisions will need to be made by some
and
people.
one quick point. A cash flow is what you need to do is to drop a cash flow. So you need to understand what money is coming in, what money is going out, what are the things that you can prioritize to see where you really are. And many people don't do that as a normal course of events. So this is a great opportunity to maybe go to the Asset website, Money Smart website, and get that financial planning tool that's there, which is a beautiful cash flow tool that you can put all your transactions in, and you can
I've
see
used
where
that.
you are.
It's very simple, really simple.
It is simple.
And
recommend it.
Yeah, absolutely. Oh, Martin, thanks again for your insights.
Good to talk to you.
That's Martin North from Digital Finance Analytics.